It doesn't surprise me, but it's surprised the market somewhat. We had quite a few banks calling for another 50 basis point rate hike at this meeting. And for us, our message to clients was that it was going to be 25 like we got. And it would have been weird if the Bank of England had done 50 because we've had a few things. One, inflation didn't surprise as strongly in the last month's print like it did back in May and June. The jobs report that we track, the REC jobs report, continues to slide. So demand for labor is actually softening, despite the official data saying it's still a tight labor market. There's clear signs that demand is actually dropping. And we've had the growth surveys, both PMI for manufacturing and services, continue their slide lower. And just now we've had the decision maker panel from the Bank of England as well that was just released. And there's been a bigger focus from the Bank of England's own agent sort of report of growth being impacted by the rate hikes. Mortgage rates are up at the last meeting. Mortgage rates were actually falling. So the Bank of England has had an impact with their last rate hike of 50. They've had another impact today of their 25. For us in the UK, I think the UK's strong run of data has probably come to an end, and it's likely to get away on sterling. I think the pricing has already dropped in terms of what's expected by year end. We've got less than 2 more rate hikes priced in by the rates market. For us, I think because of the strength in sterling against the euro over recent weeks, that should unwind. So we're looking for a 3% sell-off in the pound against the euro towards 89 in euro sterling. Would I sell cable? This is a harder question. Sterling against the dollar. 126 is quite a key level. We got there at the end of June. It was a key support. We've already fallen quite a lot against the dollar in the past 2 weeks from 131. So my message to clients would be, no, cable's not where the trade is. It's probably selling sterling against the euro, an easier and clearer trade macro-wise.
Yeah, so Jordan, you're saying then that essentially another hike in interest rates of 25 basis points is happening at the next meeting.
Indeed. The data that we track, we've got all these leading indicators that keep us ahead of the official inflation data, the official labor market data, and the growth data, GDP. We follow all these surveys, and we find relationships that worked very well in the past of financial variables as to where they will go in the future. And they all suggest the UK doesn't really have an inflation problem anymore, which you might be surprised to hear, but it's dropping off like a cliff in the very high frequency data, especially when it comes to manufactured goods, but it's also services as well. So we do expect more rate hikes from the Bank of England, another 25 basis point rate hikes. But I do think the risk in the press conference in the next few minutes, it starts in 8 minutes' time, is Andrew Bailey, the governor, might be asked, would you consider skipping the next meeting and going at a slower pace, more quarterly rather than every meeting? If he answers yes, we are considering it, or there's been a debate about it, it'll be copying the Fed and it'll be copying the ECB. And if that happens, then a lot of economists will have to revise down their expectations for how much the Bank of England does.
Yeah.